Time now for a look at some of the day's business news with France 24's Cole Stangler. Cole, going to start with a landmark settlement involving the consulting firm McKinsey.
That's right, Eva. A rare moment in which the firm is being held publicly accountable for its work with clients. McKinsey reportedly agreeing to pay some $573 million over its role in advising firms to, quote, supercharge opioid sales in the United States. The settlement is expected to be announced later today. It marks the latest step from regulators and policymakers to hold individual firms account for their role in a crisis that has claimed the lives of some 450,000 people in the United States. Catherine Viette has more.
After going after the drug companies that make and sell the prescription opioids, state legislators are taking on the firms that helped market the drugs. It's a rare instance of public accountability and a black eye for consulting powerhouse McKinsey and Company after the firm agreed to pay $573 million for its role in helping Purdue Pharma turbocharge sales of OxyContin. Under the terms of the agreement, McKinsey will not admit to any wrongdoing, but will agree to court-ordered restrictions on some of its work. According to reporting in the New York Times, company documents show a proposed plan to offer rebates to distributors for every OxyContin overdose attributed to pills they sold. The deal, reached with 47 states, settles investigations and requires the company to pay $478 million within 60 days. Those civil penalties have been earmarked for opioid treatment, prevention, and recovery programs. The settlement follows a deal reached with Purdue Pharma in October, in which the company agreed to pay $8.3 billion and plead guilty to federal criminal charges. With the company now in bankruptcy proceedings, it's unclear when states will receive their funds. The Sackler family, who own Purdue, have also made their own deal with the federal government to pay $225 million in civil penalties. McKinsey's agreement with the states doesn't prevent the Biden administration from seeking legal action against the company.
Staying in the U.S. now, where Congress is moving forward on a highly anticipated relief package.
Yeah, the House of Representatives has approved a $1.9 trillion stimulus plan backed by President Joe Biden. Now heads to the Senate, where Democrats insist they'd like to get at least some Republican support. Biden reiterated that wish last night, though it could prove tricky. The major Republican counteroffer is a much smaller bill, just $600 billion. If necessary, Democrats have signaled they're willing to push ahead and approve the legislation on their own, relying on their majority in the Senate. Let's take a look now at some of the day's trading action, starting with the European markets, where indexes are hanging just around the flat line to start the day. The CAC 40 here in Paris, just around 0% here. Maybe we get those figures up for you there. Now up to just around 0.1%. Also some slight gains on the DAX. In Frankfurt, Deutsche Bank reporting its first annual profit in 6 years. Major Asian indexes, though, in negative territory there. A hike in short-term interest rates in China weighing on investors. The Nikkei down just over 1%, snapping a 3-day winning streak. Also some significant losses on the Kospi and sold down 1.3% there.
And Cole, you've also been looking at the oil joint Shell, which is reporting a steep drop in profits.
Yeah, the firm reported earnings of around $4.8 billion for the full year 2020. That's down from $16.5 billion the prior year, coming, of course, as the pandemic shakes up the oil and gas industry worldwide. Shell and others in the sector have sought to reassure investors about their recovery, though. They say vaccine rollouts will help and expect fuel demand to swing back up in the second half of the year.
And next up, the presidents of Brazil and Uruguay say they wanted to make a regional trade agreement more flexible.
They're referring to Mercosur, the four-nation trading bloc, whose proposed deal with the EU has come under scrutiny. In the meantime, the leaders of Brazil and Uruguay have called for changes to Mercosur rules. They'd like to allow members, which also include Argentina and Paraguay, to be able to strike their own deals with third-party countries. Two leaders have called for a meeting on the topic next month.
Pertenecemos al Mercosur, vamos a cumplir 30 años de esta asociación y como toda asociación hay que reverla y mirarla. Y el próximo paso en este mundo moderno es la flexibilización para que cada país, aún perteneciendo, pueda avanzar.
And finally, a firm backed by ex-soccer star David Beckham will soon make its debut on the London Stock Exchange. The firm known as Cellular Goods makes skincare products, but with a bit of a twist. The products are made from biosynthetic cannabinoids. That means they're made in a lab, not grown from a plant. According to the firm's website, it plans to start sales in September. appears to be the first such firm listed on the London Stock Exchange, but clearly part of a growing market for what are more commonly known as CBDs.
Indeed, a market that's growing across the world. Cole Stangler, thanks a lot for that look at the business news.